My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave DeBow. And have you ever wondered what it takes to go from a farming family to managing over 370 units in real estate? Well, today, my guest, Shane Unruh, originally from Manitoba, hailing from Edmonton, is here to unravel the secrets behind his remarkable journey. Shane, welcome to the show. Pleasure to have you here.
Yeah, pleasure to be here. Thank you for having me on.
Yeah, there's two places that people leave Manitoba for, and one of them is Alberta. So was it for real estate or was it for work? What's the background there? Just decided you'd had enough of the cold winters?
Yeah, a little of both. Wanted to move to a warmer climate. I farmed kind of my whole life, and I used to come out here and work in the winter. So that's how I initially got here. And then when we made the move full time, it was for real estate.
Yeah. So what's so great about the real estate that had you moving out west?
We had started in Manitoba in the mobile home park space.
Okay.
And we figured out pretty quickly we couldn't scale that up the way we wanted to. So once we got into multifamily, Alberta was pretty logical for us. We had some connections here. There's a lot of benefits to being here. The tenancy branch, as I'm sure you're aware, if you own property in Manitoba, isn't the friendliest towards landlords. So
could be worse. Could be Ontario. But yeah. There are a lot of Canadians who are investing in Alberta because of the tenancies. It's very landlord friendly. So if you're listening along at home or in the car, Alberta has arguably the best residential tenancies branch in the country. I think some people like the East Coast, but then the East Coast went and wrecked it for everyone. So you can see it as well in the appreciation that's happened over the last 2 or 3 years. There's a little bit of a lull there about 5 years ago, but now that multifamily cash flow's kind of been on the radar for a lot of people, Alberta's been rising up. So how long ago did you start in real estate?
7 years in real estate. The first part was in mobile home parks, and then we had some smaller multifamily, but when we came in full time was in 2020. It was the first 2 weeks of flattening the curve that we went full time into multifamily. So
yeah, essential, right? We didn't have to stay in the house. We were essential to the economy, real estate, for some reason. But it was good though. I mean, it seemed to heat up. Interest rates went down. People were excited. The market was good. So did you start in multifamily, or did you start in the single family space and then move into multifamily in Alberta?
In Alberta, it was all multifamily. So we had 2 small 8 units. And then when we moved here, we started buying bigger properties. That was kind of where we were always wanting to be at.
So what's a bigger property? Like 10 units, 20 units, 30, 50?
Yeah, now our deal size is 100 and up. When we started, it was our first property we bought was townhomes. It was 27 townhomes.
Nice.
But anything apartment wise, we right from the beginning was kind of 50 units and up was what we were looking for.
Now, there's a lot of questions in there that I'm going to ask you in a bit, but let's stay at the beginning of the story because I'm interested in a couple things about that multifamily story. But what got you into real estate in the beginning? You know, a lot of people go their whole lives with just maybe never buying a house or just buying their primary residence. What inspired you to get into first of all, the mobile like trailer park kind of space in Manitoba is tough. There's not a lot. They're kind of looked down on in some respect, but really the inventory just isn't there. Like Manitoba is not known for sprawling 300 unit trailer parks, right?
Yeah. So I guess that was kind of, I'd have to call it fate. We owned and operated a gym in Manitoba as well as farming. And I had read an article in Forbes. It was called Mobile Home Park Millionaires. It was how all the funds in the States were buying up parks and kind of the model. And it just happened. There was a park in our town and it went up for sale right then, and kind of it piqued my interest and got the numbers, made a lot of sense to us. And we were able to buy a second park at a tax auction. So we had those 2 and just fell in love with the business. We did a big rehab on it, like you said, a lot of them are pretty slummy. You're dealing with a different tenant base. There was lots of drugs and stuff in there when we took over, and we got to rebuild that. We moved in new trailers, rebuilt the roads, renovated old trailers, and really fell in love with the business. Got the appreciation way up, and fell in love with real estate.
Now, do you still own those today, or did you liquidate them when you moved to Alberta?
Yeah, we sold them about a year after we moved.
Yeah, got the appreciation out. Someone else can take it over. So the mobile home millionaire sort of space, as you found, was a very American idea. There's not that many even in Canada. Something to do with, I think there's just enough land we can all have houses, or they don't fare weather. They're not great for the weather, especially in Manitoba. Lots in BC, but when you move to Alberta, it seems they built a lot more apartment blocks than in Manitoba. You can't really. It doesn't seem like there's that type of inventory in Manitoba as someone who's in that market doing that. So when you started looking at Alberta, that's a significant amount of capital to be jumping into. What gave you that capital boost at the beginning? How did you get that initial seed funding to really get into multi? Because that's a big thing, right? You say, okay, you said what was it, 12 townhouses or something to that degree?
27, yeah.
27, right? So I wasn't even at half. So 27 at 200, you can do the math. It's not a small piece of money. So where'd the money come from? How'd you get into that?
Yeah, I'll just first touch on you'd said about the supply out here. A big reason for that is because we don't have any rent control and it's so lenient. So guys want to develop, and that's always one of the pros of having a lenient tenancy branch. How we got our capital to start, we owned and operated a gym for about just over 5 years, and we sold that. Timing wise, couldn't have worked out better. Like I said, the sale went through during that first 2 weeks of COVID. And then we sold our house. The guy who bought our house bought literally everything in it. He was buying it for his daughter, and he said, even leave the food, just go. So we packed up our kids and our clothes and came out here. So we had capital from both the house and the business. And then we came in at a time when there just was nobody in the market. I mean, the first couple of deals we bought, people left hard money on, walked away. There was a lot of fear at the time. And so it worked out good. Interest rates were at an all-time low. There was lots of inventory. So,
So that's what you've been working on now. We were talking that at the beginning of the episode, I said 370 units. That's a upcoming acquisition. If you're watching this here in the time capsule on YouTube, you're at this next acquisition. How many doors are you looking at?
Yeah, so the one that's under contract, we close in about 2 weeks. It's 94 townhomes, and it's on a big piece of land. It's like 6 acres of land. It's right beside one of our biggest colleges here, or universities. It doesn't have any student housing, so it's a great piece of land. I love townhomes. They're pretty low maintenance, no common areas. Tenants pay the utilities. So,
so it's all going to be rentals. The whole thing, you're going to rent it all out.
Yeah, it's been rentals ever since. It was purpose built that way.
Oh, okay, so it's like a complex.
Yeah.
Okay, so what are some challenges along the way? Because like with these larger multi units, the real thing that people sometimes don't. Everybody wants to do it, right? You talk to everyone, especially if you have an Instagram or a Facebook. Multifamily, like crazy. At least since the multifamily conference the last couple of years. But sometimes you're bidding on property and you might waste a bunch of time. Maybe it's not a waste of time. You might spend a lot of time and come out with no property. And people think that they can just start buying multifamily and get into this game. But how many deals would you say you leave on the table versus the ones you actually do?
Yeah, at the beginning, it was a lot more. We were lucky. So I think most people realize this once they get into it, but the good property goes to a very small list of people. And then after, if those people don't want it, it goes to a slightly bigger list. And if they ever see the market, it's pretty rare. It's probably going to be a not a great deal. So we were lucky enough that when we came in COVID, there was no one else at the table. And we still had to write a resume on why they should pick us. We were the only offer there. And we had to write like why they should pick us. So it's definitely tough. As far as how many deals, I don't know. We look at everything that comes to market at maybe 10, but the deal size we're at, like there's not a lot of 100-unit properties that come up, right? So we're bidding on, like last year we didn't buy anything from for about a year because no one wanted to sell. Rents were going up so much. Now
Yeah.
we're starting to see that deal flow again and starting to look at stuff. So we put 2 offers on stuff this week. I know there's some stuff coming up in the next couple of weeks, but that stuff's never hitting the market, right? So
Yeah, I always say that multifamily is it's kind of like a trading card game. They don't ever make it to the market, and it's done in back rooms, and people are like, I'll trade you this one for that one, or I'm getting out. And it never, like you're saying, if it hits the market, if you see it on realtor.ca, probably not a deal, because multifamily's traded in back rooms and friends and handshakes and insider trading like crazy. So what's some tips that you would say, not that you want to tip your hat and give it away, but what are some tips you would say for insider trading to get access, or at least try to make moves to get closer to the short list?
yeah, and it's really not, it's not some secretive list that nobody can get on. I guess the first thing to understand, the brokers are just people, right? They're people, a lot of them are younger guys, so they're now my good friends, right? And you treat them with that respect. Don't put stuff under contract and back out. The thing that sellers and brokers want more than absolutely anything, and they'll take less money to do it, is certainty of close. That's why they don't trust new people. We just bid on a huge project here this week. And they basically said there's some new guys that came in and offered. They're not even looking at the offer because they don't know who they are. So you have to build that credibility. But the worst thing you can do, and it's out there on social media, find the deal, the money follows. That you got to make sure that money follows, because you go on your first deal and blow it and don't raise the funds and don't close, you'll never see a deal again for years. So treat the people with respect. They're, like I said, they're brokers. They don't want to be in the middle of retrading and stuff. You gotta it's a people business. In this market, there's 3 brokers that get every deal, right? That's just the way it works, and they're going to have their list. So you got to treat them fairly and follow through. Once you've become known as a closer, the other thing, what we had to do is I showed them we had the money from selling the business. So it's not like we wouldn't close because of that.
Proof
I
of
would,
funds.
yeah, I would tell people, when you're dealing with bigger stuff too, get a financial broker that's credible. They'll be able to back you up, saying, hey, here's what we can get for financing. Here's their proof of funds, and make it credible. If you own a business or if you own other property, tell that story. You can elaborate it and say, look, I've done, or if you've invested in LPs or things like that, you can lean on that. Say, I've invested in a couple hundred units with this group, going out on my own. Here's where I got my capital. Tell the story. And it's not like they won't sell to you. It's just, you're not going to see the deal first until you close on a couple. But there's always a deal size. I'm going to be selling stuff in a couple of years that's too small for me now, and someone else, it's going to be the biggest deal they ever did, and vice versa. I'm buying from a company who has billions of dollars in assets right now, right? We're buying their stuff. They're done with 80s wood frame walk up, right? So there's always deals to be had. It's just, I guess, the reputation and kind of that personal brand.
The circle of real estate, as one sells, the other one buys, and onward. And the people just get older and the buildings get older. And like you said, this one's going to be too small. Like what you're buying today or next week or next month, in 10 years might be like, oh, well, it's one of the smallest ones. It's only 94. So it's all perspective as you go through it. So, what does the future look like beyond, 2024, 2025 into the next 5 years? What do you hope to do, or new markets, new places? What does it look like for you guys?
Yeah, so right, we started the fund about 3 years ago, and we had a target to hit 100 million in assets under management. I think we'll be really close there. We'll be at 70 with the new acquisition. Hopefully we can close another one by the end of the year and get there. And then our 3-year target is we wanted to add another 1,000 units to the portfolio in the next 3 years. And then we'll start looking outside. Then we have enough scale. We self-manage everything. So you need some scale there on the management side. Once we have that scale, we'll start looking at new markets, whether it's Canada or go down south. But
yeah, you own the management company, operate the management company.
That's
they
right.
manage
Yeah.
all the doors.
Yeah. And we don't do any third party. We only manage our own property. But
That's good, because a lot of management companies get a little sideways when they when they take on other people's business. I think managing your own properties, who cares more? The management of your own properties is the one you care the most about. And so I've seen a lot of management companies go sideways on that, where they're like, yeah, we got the bandwidth. We've got the bandwidth to take on some people, and suddenly it's a split attention and their buildings aren't getting the same attention that they need to. So good for you for keeping it very linear and making sure that you're taking care of number one, which is your own assets class. So, with everything you've done in real estate and business, what's your unfair advantage? What comes easy to you that other people might find difficult to do?
Yeah, I don't know. I don't know what the word is. Risk adverse when it's calculated risk, right?
Yeah.
I think the two things that I have that are a big benefit to me is work ethic, and long-term vision. So I don't care if something, if we don't hit our 1 year, if we don't hit our 3 year target, it'll happen in year 4. And I'm looking 10 or 20 years down the road, and I'm more than willing to give up the time and the energy to get there. So I always feel I can outwork anyone in the room, and that's kind of the culture in our company. So I would say those are the two things. I don't know if they're an unfair advantage, but not a lot of people want to do it today.
Yeah, well, that makes it an unfair advantage. It comes easy to you, right? A lot of people can do the hard work, but it's not easy for them. They don't have the inner workings. You think that comes from being a farmer?
Yeah, I would say farming, and I grew up a Mennonite, so it's a totally different culture.
Yeah.
Like we had our own school system. I was the first one in my family to go past grade 9, so a lot of, you get to see all those people build big farms and all the stuff that they do, and it's just based on work. I mean, it's not, they don't have the education that it's work ethic, right?
Yeah. Some of the real estate investors I know that it seems like farmers have long-term vision. It
Yeah.
must be to do with seasons and planting, like a year's a year. Most people are thinking about 2 weeks at a time. So it seems that way. What do you think?
Yeah, 100%. You put the seed in the ground, you got to take care of it all year before you see a profit, right? And that's there's some years you don't get any profit at that, something happens, right? It's like bamboo. You put the seed in the ground, you
5 years.
cultivate it every
Yeah.
day for 5 years, and all of a sudden it shoots up. Most people just it's the old saying, you overestimate what you could do in a short time, underestimate long term. Long term is all that matters. I mean, you get in a 5 year room of successful people. I've already seen people since I moved here drop out of the business. You get in the
Yeah.
10 year room, most people are successful, make it to the 20 or 30. Everyone there is doing it big, but it's too easy. Real estate, I find, is one of the worst industries for, like, flipping was hot. And
Hmm.
then it's Airbnb, and then it's boutique hotels, and then it's buy and hold, and then it's this. And people just jump and jump and jump because it's shiny object, and there's too many coaches teaching a million different things, and they jump. Just stick with one thing, right? You stick
Hmm.
with flips. You're the guy who does flips for 10 years, you're gonna have a good business out of it. I
Yeah.
wouldn't recommend it, but you do multifamily, you don't have to buy a lot every year. Over enough time, you're gonna have a nice portfolio. But I think people jump around. You need a one-track vision. You can't do, I mean, you can do this part-time, but you're going to compete with people who are doing it full-time and have teams of people. It's an all-out thing. It's a business. You got to treat it like
Yeah.
that.
Same with especially multifamily. Like, you want to jump into flipping, you want to jump into wholesaling, you want to own a few single families. You can do that part-time. You can jump in, you can even jump out. I know, like you're saying, tons of people. I'm approaching the 10-year mark, and I can, on like one hand, the number of people still in the business. And they're doing well. They've stabilized a lot of their stuff. They've stayed the course. And it is true though that you got to do something. There's a quote, I can't remember exactly how it goes, but it says, you know, tunnel vision, clear down, become successful in that thing, then start playing around with the extra stuff. Because if you're constantly chasing that shiny object, you're going to be in this and then that and then this and then that. You're never going to get traction in any of those things. So, how are you funding your deals these days? It's through a fund, you said.
Yeah, yeah. We set up after we bought the first 2 properties, when we bought the third one, we rolled them into a limited partnership. And we bring investors in that way. There's obviously, I'm sure you're aware, but there's lots of benefits to being an investor in something like that. Just as if you own the property, a lot of stuff flows through.
Mm-hmm.
So we set it up that way. It's a fund structure, so we don't do deal specific. When somebody comes in, they're a part of all the assets. I like that a little better. You have a lot more runway. All the
Mm-hmm.
debt's not coming due at one time. It's getting spread out over time. So
It's like investing in a stock. You're in, and it's performing or it's not, and it's the long-term vision that you're talking about. So, what are some ways that you're able to um, help facilitate? Because being a fund must mean transparency, or at least a good fund. So, what are some ways that you facilitate that with your fund, with what you're doing as the management component and the acquisitions component, with the other side, the limited partners, the people who are putting money in and banking on you guys to perform.
Yeah. Yeah, the one thing we do a little bit differently, like I think obviously people have all the different options. You can go invest in a publicly traded REIT, or you can do these things. We find a lot of people, for sure, investors who maybe have $100,000 or 200,000, they're not putting in millions. They like the business. They want to know about the business, learn about the business. So we would have what I would call experiential investing almost. So you can come, you can walk the properties. As soon as you come to one of our properties, you'll know it's managed properly. It's going to be taken care of. There's not going to be garbage anywhere. Everything's going to be cleared. So they can come and look at the properties whenever they want. We usually we have a small enough investor base still that I'm talking to all the investors quite regularly. I don't know if you ever heard of Agora. We're actually going to, we just signed up with them. So that's like a investor portal. So you can log in and kind of see what your investment's been doing. Those are a few of the things we do.
Very cool. Very cool. Yeah. The transparency and, definitely those apps are becoming more prevalent, where it's like, because it's just about, you have the information. How can you get it to the people and let them know what's going on? Because I always find that good times or bad times, knowing what's going on is really what people want to know. If it's going bad, they want to know. If it's going good, they want to know too. Either way. So walk us through your approach on, acquiring, because these are properties you're stabilizing, or are they already stabilized? How you're adding value to these things.
Yeah. On your first point there, we send out distributions monthly too. So that helps. Good or bad times, we've never missed a distribution. So people see that in their account every month. It gives them a little confidence as well. As far as the property, we buy what I would call stabilized value add. So I don't like going in and doing big value add or flips. You've seen with some of the CMHC changes in the last little bit, that model doesn't always pan out. It's kind of getting phased out. I always relate real estate to a runway. If it's narrow and short and I have to land the plane, we're probably dead. If it's long enough and wide enough, there's a good chance someone can walk me through it. And that's how we look at our real estate. We want to put long-term debt on day one. I don't want to tell people, hey, you put your money in, next year we're getting it out. This is an 8 to 10 year hold period. And the reality is, anyone who understands the fundamentals of real estate, that's where the wealth is built. It's long-term appreciation, mortgage pay down, cash flow is nice, cash flow is defensive, but you want the other things. You're building wealth through that. And so we're looking for assets, generally like the last couple we bought are anywhere from 70s to 80s built. They're an institution owned them, so they put in all the big work, the siding, the roofs, the windows. Like, that's ideal. We come in, we can do the flips on renovation, the units, the stuff that actually gets the rents up. But you can you can buy a newer building and add value just on management. We have a really strong management team, so you get vacancy down, you can cut expenses, you can keep tenants happy. We have tenant incentive programs and stuff that are really cool, no one else is doing. So I think there's a lot of different ways you can add value.
So on the value add side, because these are hands-on with the management company. So with you, how do you balance that hands-on work with managing the fund and owning the management company as you oversee these properties?
Yeah, so we have employees on the management company. At the beginning, it was hands-on. Me and my wife, literally, that first property we took over, like I said, was during COVID. They told us there were 2 empty units and the property was 30% vacant, and they didn't let us in the units because of they were occupied, right? So when we took over, we literally, this was our only thing and this was our shot. So we took our kids in the playpen and did the renovations all ourselves, and that was our life for a few years. Now it's a lot different in the property management company. My wife's a big part of the company. She's the controller of the company, like the operator, and I'm just the CEO. So I deal with the employees and I give them the vision. They're dealing with the day-to-day, the tenant stuff. We have employees on that side, and I'm pretty much just on the fund side. It's raising capital, making connections, finding the deals.
So what sort of lessons have you learned, with the real estate journey so far that you could share with, people looking to get started, aspiring investors?
Well, I would say my first lesson and learned both with the park and our first property we bought was there's a massive misconception that real estate is passive. If you're going to do it on your own, it's not, right? So when we bought the gym, that was kind of the thought, we were going to passively do this. Well, we spent every evening, every weekend for years turning that over. And when we took our first property over, I would say one thing, just like for new investors that they miss a lot, you're going to look at a pro forma and think this is what your return is going to be. That's a piece of paper with with some numbers on it. You have to understand fundamentally what that business is. When we took over our first property and everything that we thought, everything that could have been right was right in that building. It had a contract with guaranteed rents. And, within 6 months of owning it, that contract got canceled. Half the tenants died. 4 of the 8 tenants died that first year. We had floods, we had the boiler go, we had the water. So like that's a reality of what can happen. The biggest trap today, in my opinion, for new investors is you can buy a building at 5% down, and all they look at is we need $50,000 to buy $1 million property. You have to have a big reserve, because best case on that property is you're clearing probably $5,000 a year. Well, that's never going to happen. You're going to be putting money in on a smaller property. It doesn't work, right? So just be aware of that. As soon as you put another 5,000 in, your return's cut in half. Or not in half, but you start cutting your return down. So be aware of it. It's a long-term play, and don't expect a ton of cash flow at the beginning. Get into it as a business. If you understand it, real estate will go up over time. It's going to outpace inflation. Might not be this year. Just hold it. Buy and hold it would be my recommendation. And yeah, it's a fun business. It's not passive in my opinion, unless you're doing it with someone else. And yeah.
So is that because a lot of people take on the management side for the cash flow? They want to, keep a really tight grip on their buildings, but it's like a real estate adjacent business where you're likely, doing all the management fees and the leasing and stuff. That's the other thing that people, I was listening to all the traps that you've jumped over or fallen into over the years. The other one that, people think that's going to be easy is that, oh, it's vacant, I'll rent it. Yeah, maybe if it's the season, in Manitoba, it's very seasonal. You might sit on an empty unit 3 months, 4 months, and then suddenly June 1st and you can't, miss. But, that vacancy thing. So is the income from, because they say it's not a passive business. You're saying, don't expect it to be. And I totally agree that I don't think any business is a passive business, but certainly there's that people tell you it's going to be passive. Did you take on the management company for the cash flow and to have that second business?
No, definitely not. I don't think if I didn't own my own property, I would never in a million years get into property management. It's not a sexy business. It's very high turnover on employees. It's a 2-year span that most tenants employees turn over. There's nothing glamorous about it. What we found, and I don't want to crap on a third-party management because I think it's an option for some people, but we did have one in our building before we moved here in one of our properties. You have to understand that their business and your business are doing their business is to make as much money as they can on fees, and yours is to not pay them as much as possible.
It's adversarial.
And on small scale, people need to grasp how small that is. If they're taking on a small 10-unit property, they're taking a 5% fee. What are they making that year? $5,000. They're not spending a lot of time caring about your property, and if they do, they're going to charge you fees to go everything they do, right? So it's kind of both ways. That's why you have to either commit to this is what we're doing full time and build that in, whether it's going to be a third party, but they're never going to operate it as good as you, in my opinion. And it's region specific. Maybe in Winnipeg, there's just absolute great management companies. I don't know. Here we haven't found
They come
them.
and go. They come and go. That's the thing. They come and go.
And it's a product of what the business is. Even on a 100-unit property, if you have someone that you're paying $50,000 a year, you can never pay them 100 during the lifespan. So if that person can never grow there, they're going to leave. So you're never going to keep a good manager in that format. The way we do it is totally different. We do remote management and we do our own stuff. We built it as an add-on to the investors because I look at all the people. Anyone can go out and buy a box with a roof on it and buy it and purchase it. That's not the hard part. The hard part is long-term managing that asset, driving appreciation, not just through the good times. Right now, anyone who's bought a piece of property in Alberta in the last 2 years looks like a genius. And they don't care if management fees are high, and they don't care. Our vacancy is 0. We set that as a joke target when we started. We've been 0 for 3 months. Our turnover is half what it used to be. Our rents are up huge. So it's like everyone looks like a genius. When that switches, which it will, real estate, it's cyclical. Once it goes down, that's when the management comes into play. And that's where you're either run a very tight ship. Third-party manager doesn't care. He's making 5%. He doesn't care.
40% of your units are empty.
And
they're not getting painted on a schedule that they can release them. And yeah.
And it really doesn't affect their bottom line. If you have 10 units and 2 are empty, their fee is so minimal, it makes them no difference. So you have to understand it. I'm sure you can find good people, but I wouldn't build it out thinking that you're going to get cash flow from it. I mean, we pay ourselves below market just because it's an add-on to the investors. But yeah, there's not tons of cash flow. It basically supports the staff, and that's the value add to the fund.
Yeah, it's like speed too is important when turning things over. Like every day you are not getting rent, that's a problem. And the third-party management, it's not their problem. They're like, oh, is it done yet? Oh, we'll get our painter in there on next Thursday. And it's like, okay, well, it's Monday of the beginning of the month, and you're telling me that you're gonna have a painter there on the 13th. So who's paying for half a month vacancy? That's like, okay, the unit's $1,000. Who's gonna pay that $500? And if it all goes well and you get it done at the end of the month, that's $1,000, and you rent it at the end of the next month. So I'm down $2,000 because you can't get a painter in there tomorrow.
Yeah.
Like it adds up. It certainly adds up with third-party management.
Yeah, and that's for me, I'm a scale guy. That's why right away we knew we wanted bigger scale. Those are the things that don't show up on a small building pro forma. If you have a 4-unit property, you can't factor in, if you're saying 5% vacancy, what does that mean? Because if one's empty, it's 25%. If one tenant decides not to leave and not pay you, you're 6 months probably in Manitoba to get them out. You're putting money in every, so yeah. So that's where, like, on smaller stuff, that little bit of vacancy has a huge impact. It's a little easier to manage when it's a 100-unit property. You could have 10 vacant and you're still 10% vacant, right?
Mm-hmm. Yeah, I've always wondered. I've always wondered about the vacancy in those large apartment blocks. Like, I've lived in some of those. I lived in one in Cleveland. It was like 2 like complexes with a center thing, and I think it was like 300 something, 350 something. Pest control was a huge problem. Pest control is a big challenge no matter what, and that's probably why those institutional bill are going away from the older construction. Do you find that, I'm sure you've dealt with as if you got that many units, you've dealt with pest control all over the place. Do you find that the older the building, the harder it is to deal with for people who are looking at buildings to buy? The newer stuff, is it easier to pest control, or it doesn't matter? It's just pest control.
Yeah, the reality is, and people don't like probably to hear, but it's tenant based. I mean, you can have the nicest building in the world and you get a bad tenant. And it blows my mind. And I've asked the guys this and I don't understand. I don't know where a cockroach comes from, because as soon as someone, like, we just had like essentially a hoarder in one of our buildings, and all of a sudden the cockroaches are there. Well, they've never been there before. They're only in his unit. So like they're somehow everywhere, but I don't think it doesn't matter if it's a new building or bed bugs come in on a shoe or whatever. You're going to deal with it. You could just got to keep it under. Like, the biggest problem people do negatively, cheap owners will go in with a little can of spray and then all the bed bugs go in the baseboards and lay eggs. You got to do it properly. There's all the tools. We get a dog in there that smells for bed bugs every once in a while just to make sure, right? You can do things like that and do it properly. If you get it properly, you can get it under control pretty quickly. It just, you have to spend the money.
Control. It's pest control. And that's a thing that we were actually dealing with cockroaches on a multi-unit, and now we can't rent the other side because they're running all over the thing. And apparently the pest control guy, and I'm like, where do they come from? He says a lot of times people move in and the box folds down, right? And they hang out in the bottom of the box that they move from. So he says, when your tenant moves in, get rid of the boxes. Tell them we'll come and take them. No boxes. Like, unpack your stuff, because apparently the number one thing for cockroach movement is they hang out in the bottom flaps of the boxes that people move from place to place, because they sit on the ground, climb on in, and off they go to your next building from the last one, because they're like, oh, it's full of bugs. Oh, phew, we got out of there. And you bring them to the next spot. So it's pest control. Yeah, I was on a conversation earlier on another podcast, and we were talking about multifamily in Canada is tough. Owning hundreds of doors in Canada is challenging because of the rent control. So if someone's thinking about investing as an LP into your company, what are some bonuses of being an Alberta-based multifamily controller? as far as rent control goes.
Yeah, so I mean, we dealt with obviously just Manitoba, but I know a lot of places are like this, but it is kind of like the Wild West. Like when I moved here, they called it an asshole tax. So if you have a bad tenant, you just raise the rent, right? Or whatever. But the reality is you don't, it's very landlord friendly, and that what makes it a good rental market for tenants as well, because we can develop, people spend the money on the property. The thing that happens in rent controlled areas is if I own a building and I can't get rents up, I can't spend the money on it.
Yeah,
So it's like
happens
we
all the
want
time
to
here.
go in and fix those buildings because we want to get a rent bump, and the tenants appreciate that. So it makes it, everyone thinks it's the evil landlord, but it really works the opposite way. Rent control absolutely kills a market. Alberta doesn't have that. They're very landlord friendly as far as, I mean, you don't ever have to renew a tenant if you don't want. If you have a tenant who's causing lots of problems, you don't have to come up with an excuse. You just don't have to renew them. You can raise rents as much as you want. Which again, it's market driven. If I charge
Capitalism,
2,000,
baby.
yeah, and
That's it.
but there's a reason that we have the lowest rents in Canada, right? It's
Competition,
and yeah,
capitalism.
it's competition. So stuff gets built here. Even Edmonton versus Calgary, we're similar, but I mean Edmonton has, people don't realize this, but have way more. We have like 30% more multifamily units than Calgary, right? So that's why our market is where it is. It got developed at a certain period of time, and as long as that continues, our rents will be affordable. People here talk about rent control, and it's like, well, we could double our rents and we're cheaper, just on a regular basis, cheaper than Toronto, Vancouver, and we have a way higher earning population, right? But yeah, there's lots of benefits. And when you get in, I mean, the tenancy branch is a fairly small organization. So when we go in to do an eviction or whatever, we've done so many of them. They know who we are. They know we're going to have everything prepared. We're not going to come in there and try to get some crappy claim and get someone out for no reason. They appreciate that. There's a respect thing. As soon as they see our name on that thing, you know, they're going to know that we have all our ducks in a row, all our documents there. And it's a great place to own rentals. And I'm sure at some point the cities will put something in that'll screw that up. But for right now, it's a good time.
The government will figure out a way to ruin it eventually, but hopefully not. I mean, I would like to see that go the other way, because we do deal with the same thing in Manitoba. Buildings that need work, that doesn't financially make sense to do the work. And so the building just continues to be where it is or gets worse because we can't invest in the building. We could, but it would be at a loss to the landlord. And so these are businesses. Like, we don't just have money sitting around. It's an investment. So if we can't invest it, if we can't go to the investors and say, this is an investment, then it's just not going to happen. And we get these buildings, like pretty much an apartment building is burning down every week here because they're sitting empty, because no one wants to do, the juice isn't worth the squeeze, and people are burning them down because they're empty. So our multi-unit count is going this way instead of, oh, let's build some new stuff. Well, it's all burning down. So yeah, you can see why Alberta is the place to go, and you guys have it going on, as far as it sounds like a great investment. And so if people want to connect with you guys and connect, maybe join in on your fund, what should they do? How do they find you?
Yeah, I'm the most active on Instagram, so it's actually me that'll message back if anyone wants to reach out. So if you go Shane Unruh _ I have two accounts. One's a verified one, one's just my personal one that's private. So you'll find me there. Excess Asset Management is our fund. If anyone wants to look up our fund, those are the two places. And then I have a podcast, Scaling Up with Shane, as well.
Cool. Well, I really appreciate you stopping by and letting people know once again, Alberta's the place to do business as far as the buy and hold market is concerned.
That's right. Thanks for having me on.
No problem. And until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.